Hi, this is Mike Wade, and welcome to this week's weekly video featuring Tom's option tools and yours truly. Before we get started, let's take a look at the disclaimers. Stock and options trading has large potential rewards, but also large potential risks. Please don't trade money you cannot afford to lose. Understand that. You know that. You also know that I'm not an investment advisor, and I'm not a broker. I'm not a dealer. I'm not here to give you advice, and please don't construe anything that I'm about to tell you as advice. You can read the rest of the disclaimer at your leisure. Feel free to pause the recording. I'll leave a final note that all prices are in US dollars unless noted otherwise. So this video is about Tom's trading tools, the dividend ranker. So I want to talk to you about what are dividends. I want to set a context so that you really understand what they are, and I want to show you how to scan for the highest dividend yield stocks. We're going to fine-tune the right stocks to buy using basic technical analysis, and we're going to talk about doubling down, increasing your premium by selling covered calls. All right, so one way to think about dividends is rent checks. All right, so you all either have properties that you rent or you know people that do. So dividend checks are similar to rent checks. So you buy a house and then you collect rent on a monthly basis. And really dividends are similar. All right, so really one way to think about dividends is that they're rent checks on your stock. Now dividends are paid out on a quarterly basis typically, and they can be quite substantial. I'm going to show you how to find the most substantial dividend stocks in the market. All right, so another thing to think about is once you get the context that you can actually collect rent, aka dividends in this case, on your stocks, you might look for other ways. And the other way that I want to talk to you about tonight is amplifying the size of your rent checks by selling covered calls. All right, with that context established, let's hop into the software and this is the main page of Tom's Tools. I'm going to take you to stock analysis, and then I'm going to click on dividends. All right, so this is the dividend ranker. It's a simple yet powerful scanner. It's extraordinarily fast as well. And with the scanner, what we can do is we can run the scan and sort by dividend yield. All right, so what's dividend yield? Dividend yield is essentially the return on investment of your dividends as related to the price of the stock. And it's calculated by dividing the current dividend amount on an annual basis, so 4 times the actual quarterly dividend, and multiply that by 4. All right, and then you divide that by the current stock price, and that will return to you the actual dividend yield. So higher dividend yields mean that there's a higher ratio of yield of dividend amount to stock price. All right, you can also rank by dividend date. Those are the payout dates. So if you want to see the dividends that are coming up the soonest, you can rank by that. You can also rank by the dividend amount, the actual dollar value of the dividend, and then you can also rank by the dividend yield change. That's useful if you're looking for companies that have an increasing dividend yield, although I want to show you that that's not necessarily a good thing. I'll distinguish that in just a moment. All right, so what we can do is, of course, we need to decide the time frame, and typically what I do is I set the time frame for a year, and that is 200 trading days roughly. I like to run my scans against the S&P 500 in most cases. Why? Well, the S&P 500 is the institutional playground. The slippages are tighter usually, and they're institutionally sponsored, so they move. And also there are typically pretty much options on all but a few of the S&P 500 stocks. So that's why I use it. You can use any index you want, of course. You might look at the NASDAQ 100. You might also look at the Russell 2000. And of course, if you want to go after the top 100 S&P stocks by market cap, you can also select the S&P 100 optionable. All right, so once I've selected dividend yield, that's going to be the ranking. I hit search, and what comes back is a list of, notice here there's 409 stocks searched, so those are the ones in the S&P 500 that actually have options. We're not dealing with anything that doesn't have options. And you'll see the list here. All right, so you have the stock name, the stock symbol. You can go after the chart. You can look at news. You got the ex-dividend date. That date is the latest date that you can own the stock before the approaching dividend date, the actual pay date, and be paid the dividends. So that's an important date. You need to buy the stock by that date. Otherwise, you don't get to participate in the upcoming dividend disbursement. And then you have your dividend yield. Again, that's calculated by taking the dividend amount, in this case on CME, or I'm sorry, IRM. The dividend amount is 59 cents. Multiply that by 4, you get your annual dividend, and then you divide that number by the total stock, the current stock price, in this case 36.10 as of the time of this taping. And then you have your dividend change, your dividend yield change, and you can see that this dividend rose by 6.94% over this time frame. All right. Now, what's important to note is because the dividend yield is calculated using the stock price, if the stock price drops, then the dividend yield will rise. All right. So why is that important? Well, take a look at Ford. I'm going to show you a chart on Ford. I happen to know what Ford's up to right now, and you'll notice Ford is in a deep dive. Ford is a decidedly bearish stock. You can see multiple down days, 4 straight down days, big down days, and the stock is below the 50-day average, which is this purple line, and the 200-day moving average, which is the brown line. So this is a decidedly bearish stock. The dividend yield is high, consequently. In fact, it's currently 5.68%, but the stock sucks. The stock's dropping. You don't want to buy a stock that's in a deep dive, even though it's cheap at $9.48. That stock looks like it might have some downside. So don't play with those. So the point is, don't just go after the highest dividend stocks. Be sure to look at the stock price. So let's take a look at IRM, Iron Mountain. Now this is the first one on the list. It has the highest dividend yield in the S&P 500. And if you look at this chart, you can see overall from March or so of 2018 that the stock has been in an uptrend as confirmed by this purple line, the 50-day moving average, which just crossed above the 200-day moving average. This stock has a higher likelihood of rising, consequently, which makes the asset itself a better asset to buy and to collect your dividend rent checks. All right, so that's the ranker. It's really straightforward. Now, I want to show you one more thing before we wrap this tool up here, and that is that you can increase your monthly rent checks by going into option and option chains and selling monthly covered calls against your stock. So which calls, you might ask? Well, sell at the money or slightly out of the money. I typically like to take the first call option that has the strike price that's higher than the stock. So I'm going to select 49-day options, and I don't need the 21 days. I want to give myself at least 30 days. I click update, and this is going to give us a rough estimate of the amount of money I can make on a monthly basis by selling call options. In this case, the stock's at 36.10, and the strike price that's $1.40 out of the money is off. The strike that's $1.40 out of the money is offering 23 cents. Now, of course, if the stock price is closer to 37.5, which is the strike price, this $23 cent premium actually will increase. But let's just say, on average, you're going to get about 25 cents, 20 cents. If you multiply that by 12, that adds up, and that further increases the size of your rent checks. Couple that with dividends, and you're looking at a really nice return on an annual basis. All right, everybody. That's the dividend ranker. Thanks for being with me, and I'll see you next week.